Good day, Ira Epstein with your metals market wrap-up for this Wednesday, and we're at the 16th of October 2019, about 4:05 p.m. Central Daylight Time. Well, the stock market is down day today, nothing major, but a down day, and as you can see, up in the gold and the silver with copper down. We still are dealing with fallout from the idea that what is phase one and how do we get there, and there's still many issues to be resolved, but as the president and the Chinese delegate said, it could take 3 to 5 weeks, and we're nowhere near that time frame, so I guess we just keep going on. Brexit today, interesting. While the British pound closed higher, they're arguing tonight, tomorrow. We're going to find out if the EU is willing to accept the newest draft that the UK has turned in for the Brexit. We had a bit of a bid today in the crude and the Brent, as Iran is saying that they did see that the missiles fired at one of their tankers came from a boat. So I don't know what that means. We'll find out. And as you can see, bonds and notes, a small bid. We saw the last night the debate on the Democratic side. We saw today President Trump talk about the Kurds when he had the Italian president in a news conference. We'll see where this all flies. As you can see on the weekly chart of closes, at least at midweek now, we're up $5.30. We're still in that overall down thrust. You'd have to close up and over this close right here, which was 1506.20, to get me to say that you're back into an up thrust based on where the closes are. As the market drifts, I still say the support's around the 1470 level, and no, I'm not saying it has to go there. When we take a look at this chart action, the market is in a stall. We can almost say the 1545 level down to this 1462 level. That was where the market traded between back here at the end of September, and this whole month of October, we've stayed within that range. In terms of the chart pattern, the pattern is temporarily, in fact, it's been bearish. You've got a lower high, lower low, and you can see the market hasn't got over that. Now, what would negate that is the market getting over this high of 1503. Also, if the market didn't first get under 1478, that could make higher lows, higher highs. So I'm giving you what could negate the downtrend, and because of the setup, if you don't take that number out, it could instantly turn the swing line bullish. The question is where the key moving average is with it, and they come in right there. Isn't that amazing? 1504.90's that number tonight. That number is dropping, as you can see, about $1.50 a day on average, $1 a day. So I would expect it's going to be right near that 1503 level when we reopen in the evening session. In terms of if the market keeps breaking, the Bollinger Band has offered the support in the market so far as we've come down to these numbers. I'd say that good support is between the lower Bollinger Band and the 100-day average. Pretty hard to get under that and stay there. Could it happen? Sure. But when you look at these moving averages, if you were to close over that 18-day average and not take that out, you do see the pattern. You could have higher lows, higher highs. I'm not trying to give you a bull pattern. I'm trying to just tell you where you're at. The bears are in control of this right now because you've got the bias down, and I use bias, I define it as where you're at in relation to the 18-day average of closes. That's what moving averages are important about. If you watch financial TV, you'll see them talk about the 50 and the 200-day moving average on individual stocks, the indices, and so on. Futures are a little different because of the leverage, in my opinion. You've got 50% leverage in stocks. You've got 90% typically in the futures, and I do think that has a bearing. Momentum. None. Flat as can be. Trying to stick its head up, but I can't call that sticking its head up. So I'm going to say flat momentum, bias down, trend down, potential support here, close over 1504, the market probably turns into an uptrend. You have the same type of pattern potential in the GLD. You've had the lower highs, lower lows. You had one challenge of that Bollinger Band here and here, and the market bounced away from them. Like the futures, you've got flat momentum in this market. And when I come to GDX, it's the 100-day average that is suddenly offering some resistance. The market came down through it very easily yesterday, coming back to challenge it today. The trend is still down. Lower highs, lower lows. The market is oversold and the bias is down. Gold-silver ratio, not saying metals are ready to go. Often I see this ratio move ahead of actual prices. Right now it's still saying gold has the edge over it. The challenge zone is this 18-day average of closes in red, as you can see. In the silver, you're in a downtrend, lower highs, lower lows. Bias is down. If the market drops, just like I said in the gold, potential support comes in 1690 towards the 100-day average, around the 1669 level, let's call that. If the market gets up and over 1776.5, because today you went to 1718, you cannot turn the trend up. You can negate the downtrend, but I wouldn't see an uptrend as defined by the swing line take place. In the copper market, when we got up to these levels, I think I was crystal clear. I think the pros were taking money off the table. When you broke through the lows here of Monday, that was really bad, because now what you've done is you've destroyed that up move. This was a move that carried on with hope, obviously, that the U.S.-Chinese deal would have merit to it, and the market, I think, has given up on that. Doesn't mean it's turned bearish. It's given up those gains, and it's back to neutral, the 18-day average of closes. The platinum remains in a bear camp with lower highs, lower lows, two levels of support. The first one is the 100-day average, second's 857.25, and like silver, even if it were to get over the last rally high here of the 906.90 level, it doesn't turn the trend up. Guess where the strength of the market is, and I know I've been saying it. Palladium, up $38 today. This has been your runaway market, and it's in part because you've kept this market at the Bollinger Bands. You haven't even made a lower low. You'd see that on the swing line. None of these are lower low days for almost 2 weeks. Now, is it getting ahead of itself? You betcha. When you're over that upper Bollinger Band, the odds of staying over it very long, 5% of the time. The market's over it today, and if you look at yesterday's close at 1696.60, it was over the upper Bollinger Band. The day before, the market closed at 1687, over the upper Bollinger Band. So that's 3 days in a row. I give the market tomorrow, the way that I use my rule of thumb, a 2% chance, because I count each successive close over a Bollinger Band as one of those percentage points, and you're right. If it goes 6, so goes my theory. That doesn't mean it's right. All it's telling you, or wrong rather, all it's telling you is the market's ahead of itself, and bulls are probably waiting on pullbacks to buy, and it's driving the shorts out as these are new highs for this whole move. In the dollar index, bearish, but, and I want to use that word but, hit its downside first target, the lower Bollinger Band. We were talking about this the past few days because you've had lower highs, lower lows. Very frankly, you've been in a downtrend since right here on Thursday of last week when you set that pattern up. As long as the market doesn't get over this high, you've had the lower Bollinger Band as a potential support. The chop areas, the 18-day average of closes. The market didn't quite get to it there, bounced away as we got to Monday. Started another rally with a reversal yesterday, and today, you know what I'm going to say, I think the pros will cover on the first challenge if it gets there. I don't know that it'll get there. It got there. That's what I think they did. So that's where I think we're at. You know, one of the things that you need, I think, if you're going to keep up with these markets, is our QT Market Center. Now, let me explain what it is. It's different than most of the mobiles. First of all, look at the size of the numbers. I helped create this because I can't see those little bitty numbers that most of these give me. So we made it to the point where you can see a lot. You can always place orders with this, by the way. You can see the last trades with it. I needed charts that actually I can see my studies. They're right here. It's not meant to replace your desktop. No, if that's what you're using it for, this small of a screen can't possibly do it. But is it quite visible? Can you easily read it? Can you change the candlesticks and all the others? Absolutely you can. You can modify your studies. I've been on a bunch of these that don't let you modify them. No, this is, I think, different. But we have something most don't. And that is, not only do we have the streaming quotes where you can place orders, but we have voice activation. So when we get to it, and by the way, this is how you set up alarms if you want an alarm to go for you when a price is hit. But voice activation to me is important. I'm driving along as an example. I don't want to look at a screen. I'd like to hear where the market's doing, and it'll rotate through your file as it's updating. That's pretty cool as far as I'm concerned. Plus, I can say, show me weather, and a weather map will come. Show me a chart on the S&P. Show me the gold, where that market's at. If I put in here the gold-silver ratio, show me that. You can go on and on with what it can do. How do you get it so you can try it out? Well, number one, it comes free with any subscription to my research. It comes free to my clientele. It is a free trial if you have neither of those. And all the news that we put out is there, plus my videos. How do you get it? Go to our website, www.iraepstein.com. And when you're there, go to the free offer section. You'll see our charting services. Give it a click. We'll send you out the user ID and password you need to get started. And by the way, it works all over the world. So if you have an internet connection or a cellular connection, it'll work with either. And it works on Androids and Apple phones. Click up here, take it from there. I think you're going to see a huge difference given everything that's in here and how easy we made it to read what we've got. I'm Ira. You have a good day.